Dear students, we will do module 80. This is computation of income from other sources part 3. So here two problems we will do. Mr. R has the following investments and income in the previous year ended 31/3/2025. Calculate income from other sources. Dividend from an Indian company 7,800. Examination remuneration 2,000. Royalty from books 48,000. Winnings from lottery net amount received on 1/3/25 35,000. We have to gross that value. Rupees 40,000 10% debentures of an unlisted company. Rupees 40,000 12% Punjab government securities. Rupees 50,000 13% less tax interest received on commercial securities unlisted. Rupees 40,000 10% tax free debentures of a company unlisted. Rupees 5,400 as interest on tax-free debentures, listed company received on 1/3/25. In October 2024, he had sold the above rupees 40,000 10% tax-free debentures of a company for rupees 45,000. This profit will go to capital gains. It will not come here. In December 2024, he had invested rupees 63,000 10% tax-free debentures listed of XYC Company Limited from her father. Interest on these two securities falls due on December every year. He claims the following deductions: collection charges for interest and dividend at the rate of 2% of the net amount realized. So this computation is different. Remember, bank is claiming collection charges for interest and dividend at the rate of 2% of the net amount realized, and purchase of lottery tickets 2,000, that is not allowed. So we will do, first one is general income. First one, I will explain that computation. First one, I will explain that computation of table showing the computation of interest on securities. See, rupees 40,000, we have to have different columns for this. One is serial number, particulars, interest due. Interest due dates are given. All the dates are 31/12/24. One is only, the last one is only 1/3/25. So here, then gross interest, rate of TDS, the value of TDS. This column should be there. So first one, rupees 40,000 10% debentures unlisted. So gross interest is 4,000, TDS is 10, rate of TDS is 10, and the amount of TDS is 400. Next is rupees 40,000 12% Punjab government securities. No TDS for government securities. So you take only the value 4,800. Next is rupees 50,000 13% commercial securities. You have to calculate 50,000 into 13/100, 6,500 you will get. 6,500. Rate of TDS is 10%. Value of TDS is 650. Next is rupees 63,000 10% tax-free debentures. Tax-free meaning grossing is there. 63 into 10/100, you will get 6,300. Now grossing into 100 divided by 100 minus 10. So for commercial securities, always gross. Value is 7,000. Rate of TDS, listed and unlisted securities, it's 10%. So the value is 700. Now the next one is rupees 5,400 received as interest on tax-free listed debentures. So 5,400 into 5,400. Now you have to gross 5,400 into 100 divided by 100 minus 10. So you will get 6,000. Rate of TDS is 10 and total value of TDS is 600. So these values are important. Now you have to take the total. This total you will get 28,300. 28,300. This value will get 2,350. 2,350. These values we are using in the computation. First computation. First one, general income. Royalty from books. Value is 48,000. Now second is examination remuneration. Exam remuneration 2,000. So total value 50,000. Now we will come to specific incomes. specific incomes, dividend from an Indian company. Dividend from an Indian company. Value is 7,800. 7,800. Then winnings from lottery. You have to gross that. Rate of TDS is 30%. 35,000 into 10 divided by 100 minus 30. Value is 50,000. 50,000. Next is interest on securities. We have calculated interest on securities 28,300. 28,300. Now the value gross income from securities. Take the total of all this. Gross interest, gross income from securities. Value is 1,36,100. 1,36,100. Now less deduction under section 57. Now how you calculate? 28,300 minus 2,350 into 2 by 100. That is 519. So your value is, now this value, so when you reduce this 1,36,100 minus 519, one lakh 35,581. That is income from other sources. We will do the next problem. We'll do the next problem. That is, Mr. A and SSC had the following investments as on 1/4/24. Calculate his income from other sources for the assessment year 25-26. Rupees 40,000, 12% central government loan. Rupees 30,000, 10% government securities. Rupees 20,000, 9% preference shares of a paper mill company. Rupees 50,000, 11% Bombay Port Trust bonds. Rupees 20,000, 15% debentures of a limited company unlisted. Rupees 10,000, 10% securities issued by the Government of England. Rupees 10,000, 9% national relief bonds. Rupees 20,000, 14% municipal debentures. Interest accrued on NSC 8th issue purchased on 11/3/24, 1,130. Rupees 18,000, 10% tax-free debentures of a limited company unlisted. Now on 1st September he had bought 50,000, 12% Maharashtra government bonds for rupees 60,000. We will not take that 60,000 value. Well, calculation is based on 50,000. Interest of which is payable on 30th June and 31st December. Since he has purchased the shares on 1st September, he will get the interest only for December. Because June he was not the owner of the shares. For this purpose, he took a loan from his bankers for rupees 40,000 at the rate of 15% per annum. And the balance rupees 20,000 was financed out of a previous loan taken for the purchase of a motor car. The motor car loan cannot be combined with this. The banker charged 2% interest and dividend as collection charges. 2% of interest and dividend as collection charges and 3% commission on purchase of securities. So the first problem is different, second problem is different. So this how we will do. You have to do this. This is different. First one is rupees 40,000, 12% central government loan. That is 40,000 into 12 by 100. You will get 4,800. Now the full amount, all the interest and dividend collected by the bank, we are collecting the information. Second is 30,000, 10% government securities. 30,000 into 10 by 100, 3,000. 3,000. Next is rupees 50,000, 11% Bombay Port Trust bonds. 50,000 into 11 by 100, 5,500. 5,500. Next is rupees 20,000, 15% debentures of a company unlisted. 20,000 into 15 by 100, it is 3,000. 3,000. Next is rupees 20,000, 14% municipal debentures. That means 20,000 into 14 by 100, 2,800. 2,800. Next is rupees 18,000 tax-free debentures unlisted. 18,000 into 10 by 100. So that is 1,800. Then again you have to gross this because it's tax-free debentures. 1800 into 100 divided by 100 minus 10. Rate of TDS for listed and unlisted securities, it's 10%. Casual income 30%. So the value is 2000. 2000. Now Maharashtra government bonds payable half yearly 50,000 into 12 by 100. Since he has purchased it in September, he will get only the December payment. So 3000. So 3000. You have to take the total value. Then dividend income. Dividend income 1800. Dividend income 1800. Dividend income 1800. Then foreign government securities. Foreign government securities income. Then 10% securities issued by Government of England. That is foreign government securities, the Government of England securities, 1000 rupees. So total is 28,030. This is the value. This is the value they have calculated. So this NSE 8th issue 1130. 1130 is also there. So this is the total collection. $1,130. So 28,030. This is the total collection made by the bank. Banker is claiming 2% on this. So we have to reduce two values from this because this is 1,130 National Savings Certificates 8th issue. It's accrued interest. Every year it's not paid. The money is paid with at the time of maturity. So there is no need for collecting by the bank every year. So though we can claim that for income tax purpose, banker has not collected. So that money we have to reduce. Then dividend from an Indian company 1800. That also we have to reduce. So 28,030 minus 1130 and 1800. So you will get the value. So you will get 25,100. 25,100. 2% banker is charging. So this value you are getting 502. 502. Now collection charges, interest on money borrowed 40,000 into 15 by 100 and the loan is taken in September. So 7 months only he will be eligible to claim. So the value when you calculate you will get 3,500. So reduce these two values from 28,030 you will get income from other sources 24,028. 24,028. So this is the taxable income from other sources. This is what I wanted to explain in this module. Happy learning. Thank you.